The rise of banks didn't start with money. It started with fear. Because people feared losing everything they had, and fear is the perfect ingredient for power. Because whoever controls fear controls behavior. And the first bankers understood that long before the world even realized what was happening. In medieval Europe, gold was dangerous to carry, dangerous to store, and dangerous to protect, so people handed their treasure to goldsmiths, trusting strangers more than fate. And that trust became the seed of a system that would grow into unstoppable global control. The goldsmiths realized something huge. People didn't want gold. They wanted the feeling of safety, and feelings are easier to control than metals, making power easier to build quietly, so they started issuing paper receipts. Simple notes that represented real gold. People traded the receipts instead of the treasure, unknowingly entering a new world. And that new world was the birth of banking, invisible power disguised as convenience. The goldsmiths discovered a dangerous truth. People rarely withdrew all their gold, meaning one bold idea emerged. Lend what isn't yours and earn from what doesn't exist. Fractional reserve banking was born. And the world would never be the same. Banks realized they could create money out of thin air by lending promises instead of coins. And promises became more valuable than gold. Shaping the psychology of entire nations, the UK became the center of this transformation. Turning London into the financial capital of the world, merchant bankers rose from the shadows, funding kings, wars, and revolutions. Without swinging a sword, their influence grew quietly. Because the smartest power is the power people can't see. When nations fought wars, they ran out of money, and banks stepped in as their silent saviors. But every loan had a condition, and every condition built another layer of control. Governments became dependent on bankers, like addicts chasing survival in the bankers. They stayed calm, patient, calculating every move with precision. When the Bank of England was created in 1694, everything changed. Forever, a private institution began lending to the government, giving birth to national debt, and national debt became the world's strongest chain, a chain wrapped in paperwork, not iron. Bankers learned that lending to nations is safer than lending to people, because nations don't disappear, so they became the quiet kings of Europe. Ruling without crowns or armies, the world suddenly ran on trust, paper, signatures, and invisible numbers, and those numbers controlled everything from wars to food prices. The rise of banks wasn't an accident. It was an evolution perfectly engineered. Every crisis became profitable, every collapse another opportunity for expansion. When markets panicked, banks stepped in as heroes, pretending to save what they actually broke. The Great Depression revealed their power, as ordinary people lost everything while banks gained even more, because when wealth transfers, it doesn't disappear. It changes hands, and banks were always ready to catch it. Behind every economic event lies a psychological pattern. Fear rises, trust collapses, control increases, and bankers mastered this pattern like mathematicians of human emotion. In the UK, banks became so powerful that even politics bent around them. Policies shaped markets, markets shaped decisions, and decisions shaped society. But behind every decision was a silent influence, guiding leaders without ever being seen. When the world moved to paper money, banks celebrated, because paper is easier to manipulate than gold. And manipulation is easier when people think the system is too complex to understand. So the complexity increased intentionally, turning banking into a language only experts speak. The average person became disconnected from their own money, without realizing it, because the bank decides how much exists, not the people using it. The digital era changed everything again. But instead of freeing people, it trapped them deeper. Money became numbers on screens, making the illusion almost perfect. Now, banks don't store wealth. They create it, erase it, move it, and reshape it instantly. And every click, every tap, every transfer tightens their grip. The 2008 crisis exposed the truth. Banks caused the collapse and still got paid. The public suffered. Homes vanished. Jobs disappeared. But banks grew stronger, because collapse isn't a threat to them. It's a cycle built into the system. When banks fail, governments rescue them, because governments cannot survive without them. Meaning the real power isn't political, it's financial. The rise of banks wasn't about money, it was about influence. Influence over nations, over markets, over people's belief systems, because belief is the foundation of banking, and belief is easier to shape than gold. When the world shifted to digital payments, banks gained more control than ever. Every transaction became data, and data became the new currency. With data, banks could predict behavior, spending, needs, fears, and prediction is the highest form of control. Central banks became the directors of global economics, pulling strings quietly. They controlled interest rates, inflation, currency, strength, and national stability, all with a simple decision made behind closed doors. The power is silent but absolute, dominating everything without raising suspicion. Banks learned that controlling money is controlling possibility because people dream using money, fear with money, survive through money, and whoever controls the mechanism controls the population. Loans became emotional traps. Mortgages became lifelong chains. Credit became dependence. Banks don't just lend money. They lend hope and pressure at the same time, and people accept the trade without questioning it. Savings accounts give comfort, but comfort keeps people compliant. And compliance is the secret ingredient that keeps banks untouchable. The rise of banks wasn't a financial event. It was a psychological takeover. The more people trusted banks, the more banks shaped the world. And trust is the most valuable asset they will ever hold. Governments change, leaders fall, economies shift, but banks remain. Evolving quietly through every chapter of history, they survived wars, depressions, revolutions, pandemics, because their power doesn't depend on peace or chaos. Their power depends on belief, and belief survives everything. The UK banking system became the blueprint for global finance, making London the beating heart of world money flow, where decisions ripple across continents within seconds, and those ripples shape the future silently. Banks now operate globally, beyond borders, beyond laws, beyond individual governments. They act as one network, unified by profit, protected by complexity, and complexity ensures no one questions the foundation. Today, people ask how banks became so powerful, but the real question is why people ever thought they weren't, because banks have been the invisible empire for centuries. An empire without armies, ruling a world without territories through numbers, signatures, and psychological precision. The rise of banks is the rise of organized influence, influence that outlived kings, nations, and eras. Influence that still decides the future every single day. And the truth is this: banks didn't rise, people raised them, through trust, fear, dependence, and now the world lives inside a system they built, a system too powerful to escape and too invisible to fight.